This time next year, what kind of yield curve are we going to be looking at? What kind of numbers are along the bottom? What are you looking for?
So intuitively, I want to say where yields are today, the Fed has to bring rates down to 3.5%. That's 200 basis points. That's a lot. That's pretty normal in a cutting cycle, and cutting cycles are usually coincident with recession. We don't see a recession, but a 3.5% Fed funds rate is 1.5 real. That seems to be a fair level, and the curve's priced for that. Then I look at all the money still sitting in cash that's out there. I think of every single client conversation I have every day. It doesn't matter if it's institutional or it's in a wealth management platform. It doesn't matter if it's domestic or international. Everyone is looking for a way to get into the bond market and frustrated beyond belief because they never got to buy at yields of 5 to 6%. And once rates start coming down, and money market fund returns start to drift lower, that money will come in. And that money's not thinking about, oh, I want to buy the 10-year, I want to put on a 2s10 steepener or flattener. The market's thinking, put me in an aggregate bond fund, put me in a general muni bond fund. Do you have an income fund? Okay, put me in there. What kind of ETF do you have? Do you have a Core Plus ETF? Put me in there. And that money comes into the market in a big way. And asset managers may sit there and say, oh, you know, yields are a little rich. I'm going to be underweight duration by a quarter of a year. So they're still buying 6 years of duration. They're underweight by a quarter of a year, and that money's coming in. So I worry yields could get down to 3% or even lower.
3.0?
Yep, 3.0.
On 10s?
On 10s.
Is that process started?
It's started in just the tiniest drip of ways, which I've always turned around and said, look where yields are. And everyone's telling you, oh, we don't like them here. We don't like them here. Look how far through the Fed funds rate are. Look how cozy it is at 5.5% in cash. Then who the heck is buying to take the entire yield curve down through 4%? There's a lot of buying of money that's leaking in, but it has not come in earnest. That process hasn't started.